I can't imagine the call volume that financial advisors are dealing with right now from their nervous clients, to say the least. Richard Saperstein is with Hightower, one of this country's highest ranked wealth managers. It's good to hear from you. Thanks for joining us.
It's my pleasure, Scott.
You know, I thought of you when I saw what happened in the muni market, and we just had the worst day in 31 years for munis. Part of the point being there has been no place to hide. Typical safe haven trades haven't worked. Bonds, the dollar, and for many munis. And you have talked about munis since we began speaking on this program, I feel like. What's your thought about this as many investors are exposed here?
Well, as you know, we've been a buyer of munis and moving asset allocations to include fixed income for about 2 years now, which sets us up into a great position to actually start buying equities when we need dry powder. Now, in terms of the muni market, it's very surprising that interest rates are moving higher at the same time as stocks moving lower, because typically you'll see a flight to quality from equities into bonds, driving yields lower. The only explanation I could find on this would be we have some leveraged sellers being forced to liquidate what they can get a bid on. Now, this week, for our clients, we've been able to add munis at 5% tax-free, which is outstanding. So instead of buying equities and taking advantage of the equity markets, we're actually able to still add some munis and take advantage of the muni bond market.
What else are you looking to take advantage of in the upset of many stocks? I think, the last time that we spoke, and I think it was on Closing Bell, you had mentioned to me that you were buying some of the mega cap tech names in the pullback. Have you been doing the same, or where else in the equity market do you think there actually is opportunity here?
So broadly speaking, we're checking out a couple of things before we think the coast will be clear to really aggressively add equities. Our current cash position is about 22%, and that was coming into this whole thing. So we're looking at credit spreads, both investment grade and high yield. They've gone up, but they're not close to where we think they could get. Obviously, the VIX has moved up. It's in the 50-60 range. But remember, in 08-09 and in 2020, it actually was up in the 80 range, so the VIX could move higher. We're seeing a lot of upside down volume where 35 and 50 down stocks versus one up stock. That's a good sign. But we're also not ready to commit based on these factors in a broad way to the stock market. There are three things that'll get us to start buying. Number one will be a change in the trigger point mechanism. The mechanism is obviously the tariffs that have caused this market to go down. If we start seeing some moderation by foreign countries in agreeing to tariff reduction or trade dispute reductions, that would be the start of a moderation of that trigger point. The second thing would be where we start seeing fundamentals improve, where, let's say, interest rates go down, Fed might cut rates, or if we see PE ratios get to a level that historically have been attractive. And the final thing, and the most important for us, is really the individual stock valuations. And here we're starting to get very interesting, because if you look at different industries and sectors, you're starting to see on an operating cash flow basis these stocks becoming very attractive. I'll give you a few examples. If you look at large cap tech, some of the large companies now are trading at operating cash flows based on the next 12 months of close to 10%. Now, we haven't seen that in 6 years. So you do have some opportunity in large cap tech. As you know, I've been an owner of the independent power producers. Some of those are trading at operating cash flows of close to 15% right now. So what does all this mean? It means on a fundamental basis, when you look at the valuation of individual stocks and not the broad stock market as a whole, some of these names are becoming very attractive on an OCF basis, where they can start buying back stock and returning capital to shareholders.
Rich, thanks for coming on. I appreciate you. Thank you. We'll see you soon.